Well, I guess we can start talking. All my friends are being told that I'm live. For anybody who is watching, these videos do get posted on YouTube as part of a Let's Talk Real Estate series. JP's here. Hey JP, how's it going? Just waiting for a few more people maybe to jump on, and then we'll have a little quick chat. Colleen's here too. Yay, Colleen. Hey. We'll have a quick chat here today. Actually, this comes out of some recent experiences that I've had in selling real estate here in Hamilton, and a quick chat I had this morning with one of our office managers, David Junker. So I'll tag him in the post as well. Basically, what's happening here in Hamilton is that because mortgage lending rules and that are sort of tightening up, what we're seeing is that a lot of transactions, lenders are requesting, hey Colleen, are requesting appraisals be done. So the banks, lenders, all these kind of people, usually what happens in a financing approved process is that it's a two-step thing. So normally what happens is that a buyer will go to a bank, and the first part of the process is for the buyer to get pre-approved. Now, generally speaking, all that's involved there is that the bank or the lender will have a look at the buyer's finances, your credit report, your credit history, how much money you owe to different institutions, if you've had mortgages in the past, et cetera, and your tax returns, how much money you're making, an employment letter probably from your boss, just to find out how much you could afford to carry in a mortgage. So they might say to you, here's a rate we can offer you, and that is changing as we mentioned in the previous video about how that qualification process happens. But they'll come up with a rate for you, and then they'll turn to you basically usually and say, based on your down payment, based on the rate, based upon how much you owe and what your credit history is, you can afford to purchase a house up to, say, $400,000. So you can go out now with your real estate agent, your realtor like myself or some other people, and start looking at homes in that price range. So anywhere like 400 usually is what they're talking about as your maximum based on the down payment you have. So you look for houses up to 400,000, and if you're smart, you're probably looking just below that because you don't necessarily want to stretch yourself out to the limit. So you start looking at houses, and then once you find a house, you place an offer, you go through a negotiation process and all this sort of stuff. And once you come to an agreed price for that house, you then have to take, if you have a financing condition in your offer, which is very important, you have to take the information for the house that you're purchasing, including the price that you've agreed upon and information about the house, and then send that to your bank or your mortgage specialist, your lender. So now they can approve the house, mainly because they don't want to lend you more money than what they think that house is worth. Basically, if you default on your mortgage payment, the bank's going to take possession of your house. And the way they get their money back is by reselling your house. Now, they don't want to give you $1 million for a house that's only worth $500,000, because then they're stuck with a house that's only worth $500,000, and yet they've given you a lot of money. So nobody wants to be in that situation. So normally what they'll do, if the purchase is questionable, is request an appraisal. Now, appraisals happen in a lot of different ways. Like I said, if the price is within range for what's being sold in the neighborhood, usually there's an automatic appraisal process that happens at the lender. So their computer automated model basically comes up and says, yeah, that price is in range for what's being sold in that neighborhood. Everything's good. Go ahead and approve the mortgage. It's not really much of a risk there at all. If we do have to take possession of the house, we could probably sell it for about that much money or more and recover our money. No big deal. Now, if you're in the bidding competition, bidding war, all this kind of stuff, sometimes the prices get out of control, or if not a lot of houses have sold in that neighborhood for a long time, there may not be a comparable sales history really to go on. So if it's been a while since a house has been sold, this new sales price could be a lot higher than the last house that sold. So it's out of range for what's happening. The computer kicks it out and says, sorry, this doesn't look right to me. And what they'll do is then order an actual appraisal. And that appraisal happens in a couple different ways. Depending how far out of range you are, if you're fairly close, they may order what's called a drive-by appraisal. So they'll contact an appraisal company, someone who's a certified appraiser by the Appraisal Institute of Canada or a number of other bodies. And then that person will just drive by the neighborhood, just check the neighborhood in general, check the house and the exterior, see what kind of condition it's in, and say, yeah, you know what, everything looks pretty kosher, everything's cool, that's a pretty decent price, we can go ahead. If you're kind of a bit further out of range, or depending on the area that you're in, then they'll ask for a full appraisal. And what happens there is that they order the appraisal from the same appraisal company, and that person actually makes an appointment and goes and looks at the house in detail. So they'll go into their house, they'll maybe even measure rooms, they'll look at comparable sales in the area, they'll look at the condition of the interior of the house, things like the furnace, the roof, what the finishing is like baseboards, doors, has it been recently painted, is the kitchen out of date, all that kind of stuff. So they'll do a very thorough look at the house and come back to the bank and say, hey, here's what we think in terms of pricing. There's Lori. Hey, Lori. I can't do the face because it hurts my face when I do your face. So sorry, I can't do that. But so to get back to what I was saying, the appraisal will go do this full appraisal, and then they'll take their number and go back to the bank. Now, if what the appraiser says and what you're offering to pay for the house are roughly equivalent, there's very little risk involved at that point in terms of how the bank is interpreting the situation, and they'll go ahead and approve your mortgage for you. All great. If there's a discrepancy there, the bank's going to come back and say, sorry, you've offered, say, $500,000 to purchase this home. The appraisers come back and said, really, it's only worth $450,000, so we can't give you a mortgage up to $500,000. So what happens then? Can you still buy this house? And the answer is yes. Yes, you can. But there's a stipulation here. So what the bank is willing to do is they're willing to give you money for this house, but what they're essentially saying is that they want to limit their risk to $450,000, because they're saying, if in the case that you default and we have to resell this house, that's what we think we could sell it for, we could recover our money, and in that case the risk is fairly low. Now, if you've agreed to pay $500,000 for the house, God bless you, go for it, and what we do is come up with that extra money. So we're willing to give you a mortgage up to $450,000. You have to come up with the down payment that goes towards that $450,000 mortgage. Plus, you're going to have to come up with that extra $50,000. So now that risk is all yours, because that's your money that you're risking. If for some reason the house can't be sold for that much money in the future, you're the one that's going to lose, not us. So you can go right ahead and buy this house. You can try to find a secondary lender. You can try to find private financing if there's somebody that's willing to lend you the money and charge you an interest rate as a second mortgagee on this property. That's possible. You may have your own funds available. So a lot of what's happening in Hamilton is that people are coming from Toronto, having sold their houses for a fairly high price, buying homes here in Hamilton that in some cases are half of what they've sold their house in Toronto for. So they're willing to cover that extra bit of money if they really, really want this house. Now, if you can't come up with that money and the bank's not willing to give you a mortgage, then at that point the deal falls apart. And that's happening more and more often here in Hamilton because they are coming up with these stricter appraisals. They're being a bit more picky as to how much they're willing to say a house is worth. And actually what's happening, this is coming out from a conversation I had with David Juncker, what we're starting to notice is that a lot of people coming from Toronto have mortgage brokers in Toronto. Those mortgage brokers have appraisers from Toronto who are not familiar with the Hamilton area. It's a lot like getting a real estate agent from Toronto to come to Hamilton. And they see a house, they see it's lower price than what you get in Toronto, and because they're not familiar with the area, because they're not familiar with the sales, they're thinking it's a great deal. And they're telling you to buy, because this is an amazing deal. Whereas if you dealt with a local realtor, they'd be able to look at it and say, no, dude, you're getting kind of hosed. That's pretty high for that area, actually. That, we should negotiate this and try to get you a better deal. Now, in terms of the appraisal, it's kind of happening the other way around. Like they're just not familiar with the area, and they're thinking that the prices are going to be even lower because they have this impression, like a lot of Canadians had the impression that real estate in Florida was super cheap after the real estate crash in '08. They thought they could go down to Florida and buy a house on the beachfront for like $10,000, which was not true. And the people from Toronto, GTA area, kind of had that same impression of Hamilton for a long time. A lot of people are coming to Hamilton thinking they can buy an amazing Victorian era, beautiful home, century home for $150,000. That's not happening in Hamilton, just so you know. The prices are good, but we ain't giving this stuff away. So that's kind of happening here. The appraisers are coming and they're giving actually fairly low appraisals for things. Like I just had a client where we were about to purchase a home for just under $200,000, but the appraiser went in and then actually came back with an appraisal of $160,000. Now I'm telling you, as an agent who's experienced and who's been working in these areas, you cannot buy a decent house in this area for $160,000. I don't even know if you can buy a detached home like this one was for $160,000. It's nearly impossible unless the thing is falling down or literally on the same industrial grounds as a steel mill, which is not happening. So this was a little bit out of whack, and we had to kind of go back and fight this thing to try and get this person his home, because other houses that were being sold in the area for in that $200,000 range, actually their final sale prices were 230, 240, and 250 because we had a number of people competing on them, and that's pretty much the market value at this point. So you need somebody on your side kind of fighting for you, and this happened in the $200,000 price range, but it is also happening in the $400,000, $500,000, $600,000 price range as well. I've seen offers fall apart where people have offered, say, $430,000 for a house that was listed at $400,000, and there's a couple of offers in there, and then the appraiser comes back and says it's actually, in my opinion, it's only worth $360,000, $70,000. Either because they're misled, they don't have all the information about the current sales, or they're just for some reason being really sticky when they really don't need to be. I mean, if you're looking, and if you're being honest, and you're looking at the actual sales in the area, and you're trying to figure out what is the market value of this home, like what are people willing to pay for this home, it's based on market value. It's based on what people have been paying. It's hard to come up with an arbitrary number that's extremely low, and sometimes you get the impression that they're almost trying to make a point. And it's if you've talked to enough people around, it just doesn't seem right. If you go into a neighborhood where the last 10 homes have all sold for about $450,000 and are roughly equivalent, for somebody to come in and say, actually, no, they're only worth $360,000, doesn't make a lot of sense. So you need somebody working on your side to help you do that. And a professional realtor can do that for you because they have access to the information and they can help. So that's my quick rant for today. Hopefully it's just before the Canadian Thanksgiving weekend. Hope everybody here in Canada has a great Thanksgiving weekend. Hopefully you people down in the U.S. who may be affected by the Hurricane Matthew that's coming through, I hope you're all safe and sound and you all get to go back to your homes and there's not really a big deal after all is said and done, and it's just a lot of water and it all goes away and everybody's happy and safe, and I wish you all the best. If you're looking for me, please feel free to private message me here. You can email me at tony@thegeekyagent.com. You can text or call me at 289-237-9896. If you're on social media, this is me, at The Geeky Agent, on Pinterest, on Instagram, on YouTube, on Twitter, Snapchat, whatever you want. And actually, you know what? I had to write this backwards so that you could read it, because my phone does this weird kind of thing. It puts everything backwards. So think about that for a second. Anyways, guys, have a great weekend. As always, thanks for tuning in. I hope you have a great day, and I'll talk to you soon.